Forget what you think you know about Bitcoin's next move. The modern investor is talking about something huge. A real proposal is on the table to let you use Bitcoin as mortgage collateral. This isn't just about ETFs anymore. It's about plugging BTC directly into the US financial system. While that's brewing, Crypto Rover says the current sideways chop is a trap, setting up a massive rotation into altcoins. Panicked by the recent dip? Lark Davis calls it a simple leverage flush. 943 million wiped out, which is pretty standard stuff before the next leg up. So what's the play? Data Dash is already sharing his watch list, looking at Ethereum, Arbitrum, and even some high-risk gambles. With all this happening, are you positioned for what comes next? In the latest video from the Crypto Rover channel, the argument is made that the current market is setting up one of the biggest traps in a while. While Bitcoin is just moving sideways and altcoins are taking a hit, this is presented as the perfect moment for a huge rotation into altcoins. The video suggests this is the last stage of the bull cycle where the biggest gains happen, and shorting the market now would be a mistake. In my opinion, the video captures the current optimistic sentiment well, especially with the news surrounding Trump and the upcoming US crypto report. It's true that political winds seem to be blowing in a more crypto-friendly direction, which could certainly boost market confidence. However, the idea of a massive, immediate supply shock for Ethereum fueled by institutional ETF buying might be a bit premature. Recent data shows that while the ETH ETFs did have inflows, the initial volume and demand have been noticeably weaker than what we saw with the Bitcoin ETFs at their launch. This doesn't mean the rotation isn't happening, but it might be a slower burn rather than the explosive event some are hoping for. The market seems to be weighing this less than stellar institutional debut against the positive political news. In the latest video from Lark Davis, he tackles the recent crypto market crash, explaining it's not a time to panic. He points out that after a massive pump, a pullback was expected. The market just experienced a huge leverage flush, with $943 million liquidated in the last 24 hours. Davis says this is normal and often happens when too many people try to long the top. He contrasts the crypto dip with the stock market, which is up following news of a potential US-EU trade deal, suggesting the macroeconomic picture is still positive. Lark's take on this being a leverage flush rather than a fundamental market shift seems spot on. These kinds of sharp, fast liquidations have become a recurring feature in crypto bull markets. They're almost a necessary evil to clear out excessive speculation and build a more stable foundation for the next move up. It's interesting to see how Bitcoin holds its ground like a heavyweight while the altcoins get tossed around. This really shows the difference in market maturity and liquidity. The fact that many altcoins pulled back to textbook technical support levels, as he pointed out, suggests that this was more of a technical event than a panic-driven sell-off. It feels like the market is just catching its breath before the next leg of the race. In the latest video from Data Dash, Paul lays out his thoughts for August 2025, suggesting that as Bitcoin's big run slows down, money is starting to flow into altcoins. He shares his watch list, which includes a few big names, some mid-sized projects, and one high-risk, low-cap coin. This list feels like a classic bull market playbook, mixing relatively safer bets with some high-risk shots. The focus on Ethereum and its main layer 2, Arbitrum, makes sense. The fate of many altcoins is often tied to Ethereum's performance, and as ETH gains steam, its ecosystem usually follows. The inclusion of Arbitrum is particularly interesting given the intense competition it faces from other layer 2s like Base and Optimism, which could affect its ability to stand out. The picks of older coins like Chainlink and XRP seem to bank on the idea that established names with strong communities get a lot of attention when retail interest returns. XRP, in particular, always seems to generate buzz, though its price action is often influenced by long-running legal narratives as much as market trends. The high-risk gem pick is a good reminder of the speculative frenzy that can take hold, where the potential for huge gains comes with an equal, if not greater, risk of total loss. In the latest video from The Modern Investor, the host talks about a major shift happening in finance, something he discussed with friends recently. One friend is hesitant to sell any crypto to buy real estate, preferring the simplicity and returns of staking crypto over the hassles of being a landlord. The conversation points out that while new Bitcoin wallets are appearing, Google Trends data shows that the general public, or retail, isn't really in the market yet. It's mostly existing crypto holders and big institutions. The idea of using Bitcoin for mortgage collateral is really picking up steam. It's not just chatter on crypto channels. The FHA has a real proposal on the table about allowing federal home loan banks to accept digital assets as collateral. This feels like the next logical and massive step after the spot Bitcoin ETFs. While ETFs let people invest in Bitcoin through traditional means, allowing it as mortgage collateral would weave it directly into the fabric of the American financial system. It changes Bitcoin from just a speculative asset into a functional, foundational one. It's fascinating to watch this play out because it puts traditional banks in a tough spot. They've been slow to adapt, and now they face a future where their core business, lending, could be backed by an asset they've largely ignored or dismissed. This is more than just a new product. It's a potential restructuring of how value and credit are understood.